All right, what just happened to the stock of DowDupont? This story should be all about a business taking control of its own destiny. Last year, two of the world's largest chemical companies merged to create this colossus. Next year, the combined entity will break itself up into three separate businesses: an agriculture company, a material science company, and a specialty products play. But what does Wall Street care about? Raw costs. DowDupont reported this morning, and even though the company posted a nice top and bottom line beat, I like this. With real strength across all three businesses, the stock sold off anyway, down 2.2%. Why? Well, because management talked about a couple of headwinds: the strong dollar, rising raw costs. I think that may be a mistake to focus on. What matters here is the breakup. So as we get closer to the freeway to corporate divorce, I want to introduce you to the individual components that will be trading of DowDupont. Tonight, we're starting with the education of the material sciences division, the part of the company that's taking the name Dow Chemical after the split. This business makes various high-end coatings along with chemicals used in the energy infrastructure industries and all sorts of packaging and specialty plastics. Its sales were up an astounding 18% in the latest quarter. In short, there is a whole lot to like here. My Chapel Trust owns the stock. Let's dig deeper with Jim Fitterly. He's the Chief Operating Officer for DowDuPont's Material Sciences Division, who'll become the CEO of the post-breakup Dow Chemical. Find out what the future holds for his business. Mr. Fitterly, welcome to Mad Money. Good to see you, sir.
Good to see you,
Have
Jim.
a seat.
Thank you.
All right, now, Jim, I got to tell you, it was a hard call because you're still dealing with three different companies all under one roof. We're going to get these Form 10s that I think is really going to excite people coming up. Those are going to describe what's different, but what the companies will look like. But this division that you're running, we're talking about double-digit gains in businesses that I didn't think had even single-digit growth. Is that share take? Is it high quality? Is it laser focus? How are you putting up these numbers?
Well, we have a very focused team, Jim, but we've also been investing in organic growth in the core of these businesses. So, you know, we've built a big joint venture in Saudi Arabia with Sadara, and that's up and running, and you're seeing the full effect of that coming in now. We also built a lot of assets on the U.S. Gulf Coast to take advantage of shale gas, and that's up, and it's been running for a year. We've actually got two more expansions coming on the end of this year.
So you are basically the low-cost producer of what you do produce.
We are, and we work very hard to keep improving the cost position. In fact, both Saudi Arabia and the U.S. Gulf Coast were the lowest cost places for us to build to service the market. Sadara was built to service Asia, Africa, right, Middle East, and Asia Pacific, China, and U.S. Gulf Coast to service North and Latin America.
A lot of people have been saying, well, these guys are going to get killed because of the tariffs, but China gets Sadara, right? And that matters. That does not count as like, well, wait a second, we got a sticker at American.
Well, it matters, and look, we tried to build that up deliberately because we saw that the world was changing. Right. We saw that the trading bloc in the Americas made a lot of sense. The supply chains are tighter. It's not as expensive for us to move product. And the trading bloc in the Middle East to Asia Pacific, there's a well-developed supply chain there. So we played off of that. But we also had a great partner that wanted to build with us and wanted to build out the technologies that we have.
When I mention plastic to younger people, they say plastic is that giant island that's the size of Antarctica in an ocean, and that's what plastic did. It wrecked the environment. I see numbers that indicates that may be what the millennials are saying, and plastic straws, plastic cups, but the world is still going toward plastic.
Plastics are a great sustainability story. They're the most sustainable package in the world, and they're the fastest growing packaging in the world. We do have a plastic waste problem, though. And at this point in time, I've never seen the industry more aligned about tackling that problem. We've been working on a very big initiative, which you're going to hear more about in the coming months, which is to go after this plastic waste issue.
You have to do that, sir, or else your stock is not going to be owned by any millennials.
Well, every year we make 400 million metric tons of plastics as an industry, all types of plastics, and they go into many different markets. We're dealing with about 8 million metric tons per year that ends up as a waste problem. It's not acceptable. We have to address it. And the good news is the industry has many solutions to do it. They're aligned through the ACC, through CEFIC in Europe, and through our other international chemistry councils. We're working on a joint program which can bring in our other value chain partners, bring in NGOs, bring in private money, work with governments to try to develop signature projects and solutions that are actually going to tackle this issue.
At the same time, if I am a carbonated beverage person, I have to say that the aluminum pricing has now been priced out, that there's basically a cartel among some of those companies. The only thing that could bust it is plastic. Are you getting people to switch from aluminum to plastic? Because aluminum just shot up so much.
There's always a trade-off in packaging. So whenever one package price gets too high or whenever there's another issue, people switch. When they switch to plastics, typically they switch for a couple of reasons. It's the lightest weight package and it's the strongest package. So compared to, say, glass or aluminum, you can make a flexible pouch that's recyclable as well, and you can put it in plastic. Less shipping cost, less environmental footprint, better CO2 footprint overall.
Well, the same thing, I was on a Trex call yesterday. They're smart guys, and they're just talking about how wood priced out, that you just can't afford to do wood. There are plastics now that look every bit as wood, but are much more durable. I mean, again, I'm seeing these new uses. Are they part of what's driving double-digit gains?
Exactly, and new markets growing up. So the growing middle class drives a lot of what happens in packaging. So North America, for example, we had 8% growth in our packaging and especially plastics business this quarter. That's a big number. Most people don't expect that in North America. We had double digits in Asia Pacific. We have double digits in other parts of the world. But it's because you've got a growing economy and you've got a change in markets. People are moving from fresh foods that are not processed to package. Every time we put food in a package, we increase the shelf life a week to 2 weeks on the shelf. That's a big value chain improvement for the owners, the retailers, the homeowners as well.
All right, the last question is people are constantly asking me, when do I have to own it? I'm telling people to buy it now because it's going to be evident to all the big institutions soon, but when will we see you as a CEO of an independent company?
We're going to be spun out by the end of first quarter 2019. Okay. You're going to see a Form 10 from us in September. I think you're going to see a Form 10 from AG in October. You're going to see an Investor Day in November. And we're going to be on the road from that point on, getting ready to spin this new company out.
Well, I don't want to cite the other guys, but this is the division that I think's got the best growth, and I think you're terrific at doing what you're doing. That's Jim Fitterling. He's Dow Chemical CEO. Now, right now, it's DowDupont. Just stay patient. But I think you got to buy the big cap right now, DowDupont, before we get to the breakup. Dave Money's back in.